10th edition of IEC. But on the first edition of IEC, and I would not use Sensex for benchmarking purposes, I would use Nifty for benchmarking purposes. 10 years ago, of course, Chauhan Saab was BSE, so I was using Sensex for benchmarking purposes. Ab NSE pe to Nifty ki baat karte hain. Nifty that time was sub 10,000 and closer to 6,500. Today we are standing tall at 25,000. So starting with you, Mr. Sikka, last 10 years, it's been a 4x only for the index. Next 10 years, where do you think Nifty could move?
So, Nikunj, I don't think so. I can give a prediction on the Nifty. But broadly, the way we should see is, I think, the other way around, the way India is growing. I think today we are at a point that I think we are almost, whether in the next 2 or 3 years, will be a $5 trillion economy. And stock markets are a reflection of the economy doing well. So I think for us, rather you talked about Nifty, I'll say I was a part of the first edition, and that time you asked this question to me, about the mutual fund industry. At that time, the mutual fund industry was less than 10 lakh crores. Today we are at a point where we're almost going to be touching 70 lakh crores. And all this has happened in the last 10 years. So I do not know, I think, what will be the Nifty, but I can tell you two things. We are at a stage where the capital market, the mutual fund investors in India, I think, are coming from small cities and towns, and today it's becoming a household product. So we are coming to a stage where very soon, maybe next 10 years, every Indian household will be a mutual fund investor. And that's the kind of capital flow that will come from household savings to capital markets. And I think with the country doing well, I think the biggest thing is we are at a stage where Indians will start benefiting from the India growth story. So I think maybe 10 years down the line, and I don't know the Nifty, but I can assure you with a lot of conviction, every Indian household will be a mutual fund investor.
And the data is quite, staggering. India has only 5.5 crore unique portfolios. Yeah. We have 20 crore OTT accounts, and we have about 25 crore food delivery accounts. So in a country which is young, in a country where the average age is less than 50, the number of portfolios are nothing compared to global averages.
I cannot agree with you more, but Nikunj, the way we have to see the trend is changing very positively. Today we are seeing a lot of young investors, women investors coming from smaller cities and towns. So maybe 20 years back, when my father retired from government service, he had to put his proceeds. When I told him about mutual funds, it was difficult to convince him. But my daughter started working, the first salary she invested in mutual fund SIPs. So that's the change that's happening in the country. So I think I'm very confident. I think this 5% right now looks low, but directionally the speed at which the change is taking place is unbelievable. So I think we're headed for good times, and it's not about the mutual fund industry. It's great for Prime Minister's vision of Atmanirbhar Bharat. I think we are trying to be basically from a capital which is in small cities and towns, from how financial saving is coming to the capital market. So this is the true way how we can be Atmanirbhar Bharat.
Mr. Chauhan, this financial inclusion, which now seems to be picking up in terms of a trend, and more importantly, acceptance and faith, is the trend here only going to multiply in next 10 years, and how much can it multiply?
See, I'll give you the information as of date. Today, we have at NSE around 21 crore accounts, which comes to 10.7 crore unique PANs. 10.7 crore unique PAN numbers, which is unique investors, out of which around 2.2 crores are women. So 8.5 crore males. More than 8 crore households are now directly investing in stock markets, including mutual funds, but also directly investing. And 8 crore households is actually more than 20% of all households in India, which are directly or indirectly through mutual funds. Of course, they are directly investing because they are our customers, because we are an ID market, so we know. And to give you an information, at 20%, we are amongst the very large country in terms of even percentage of people investing in stock markets. Germany does not have that number. France does not have. Entire Europe does not have those numbers of 20% households. And the other side is also true, that now that 8 crore households are competing with number of farming households in India. any type of cohort you see as a political constituency, now we are actually, although both of them do not know that, but today their constituency is equally larger or equal or larger than other political constituencies. So this is becoming very important because Delhi needs to know that investors of India are now a force to reckon with.
But investors in India pay taxes, farmers still don't pay taxes.
That is, again, for me, it's besides the point. But they will have expectations and they will assert. See, when, say, 5 years back or even when Mr. Modi took over in 2014, there were 1 crore investors. Today, 10.7 crore investors, unique. 67 lakh crore were market capitalization. Today, 440 lakh crore, 6.5 times more in 10 years' time. For me, those numbers is 1/3 of India's wealth. Today, stock markets are 1/3 of India's wealth and double the size of India's banking system and more. In equities alone, right? If you take debt, it will be 2.5 times. So it's a very large thing in whichever way you look at, because people are now directly, there are two types of financial savings. One is what we call intermediation, which is through the banking system. Other is through the markets, which is called disintermediation. And today, a large part of India is saving through the disintermediation route, that is through the markets. And last month, there was an interesting sort of a research report by Morgan Stanley, which said that from 2014 to 2024, 3% of the savings incrementally went into stock markets. But at the end of 10 years, the outcome is 20%. So that 3% which people are saving into stocks have now become 20% of the total savings, whereas what that 97% has become 80%. So effectively the stock markets are becoming the primary driver of people's savings by demonstration, by checking out everything that people are seeing their neighbors actually making better returns, and that's why they are coming to the stock markets.
Mr. Sikka, at every forum where we interact with you or we speak, we always do this very simple exercise so that we can explain the word or the magic of power of compounding. Let's do that again before I go to my next question. What is power of compounding? And if money grows at 10%, 20%, 25%, what difference does that make?
Well, it's a very interesting thing. I mean, this is one of the not so well discovered, formula by a lot of retail investors, but those who have discovered, including some people on the dais here, they've been able to create a lot of wealth. So what is power of compounding? I think the beauty is, many times, and I'm going to step back a little, whenever investors invest in markets, they start thinking it's very important to invest and review and reinvest, move out, keep taking those calls. But the power of investing is basically that comes when you're a lazy investor and an informed investor. And I'll try to define both the things differently. Lazy investor is someone who invest for long term, is not basically getting human bias into it again and again because the markets are going up or going down. But the intelligent investor is basically the one who understands the power of compounding. So let's give an example. One of the oldest funds in the country, which started in 95, without naming it because I'm on the platform here, the NAV of 10 is today about 4,000. So that technically means basically that fund over the period of time has given a return of about 23% since 95, compounding. But if you were to look at another fund, which would have given just basically 15%, so that 10,000 rupees, which becomes 4 crore rupees, effectively the 10% difference means the wealth is actually half. That's the power of compounding. What we see 10%, 5% looks very small, but you see over a longer period of time, it totally changes the dimension. So I think from our point of view, the power of compounding, Nikunj, that you mentioned, that is one big change that we have seen. Unlike in past where people used to try to invest in mutual funds like stocks, buy, trade, move out. I think we have seen a very big change. Basically, people are understand the power of compounding, investing for long term. And I think that what we are seeing, the longevity of our SIPs increasing day by day. So I think all I can say is, to Nikunj's question, the power of compounding, what it does is basically, it is not basically in a linear way. I think it basically, 10 rupees becomes 4,000 rupees NAV over 25 years, and the compounding is only 20%. And that is the wealth that a person